Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go.
Hiya, everyone. Today is Wednesday, August the 13th. You know, when I was in Finland, the way they say hi is hi, hi. That's their good morning number that they do. So my favorite is the Scottish way of saying hello. Hiya. So, anyway, here we are with the Mini S&Ps, taking a look at it first on the 30-minute chart. We have the highest volume candlesticks of the afternoon of yesterday, right here. Notice we came down. I had an order here. I went to sleep. I said, I'm going to be a cheapskate, and I'm going to put it down at 64.60.75. And wouldn't you know it, it came into 64.61.75, left me in the dust. But I know the setup works. So here we are, highest volume candlestick of the afternoon, highest volume stick of the morning, and I'm calling it a stick, but we know it's a candle, is all the way down here. So what are we staring at? Trend up, momentum down. So what does that tell you? On a 30-minute chart, you can buy old resistance when it tests as new support. So you can put your trade out here and have a very tight stop. If you're wondering when the chart just accelerates up to the upside, so you're sitting around and you're saying, holy cow, I want to trade, just remember, old resistance coming in as new support gives you your buy zone. And when you've got trend up and momentum up, you can pull back and look for support levels that break out. And so you can see these nice little stair steps that you can give yourself for a trade. So what are we doing right now? We're pretty sideways. We know that President Trump is in Europe today. He kicked the can down the road again with China. But trend is clearly telling us support action is going to give us buy zones. So the question might be, okay, overnight trading is essentially long. Do we have a reflexive test of the 30-minute candlestick of the prior day? Notice our opening candlestick is inside of this big candle. So this candle takes precedence because of its location for the 30-minute. So we can look at these edges and see very neatly that the highest volume candlestick of the pre-market is here at 7:30 Eastern time. I'm not sure what happened there, but again, 85% probability that the opening range candlestick, if it breaks the top, it will come back and test the bottom, and we can use the prior day's candle to put us in motion. Trend up. Trend is always master and commander. Someone posed a great question yesterday, asked about what do we think about when the MACD is fading? What's it supposed to tell us? Well, in order to know what the MACD is telling us, we must look at trend. If trend is up, the MACD is saying, I'm looking for support. Trend, always master and commander. When trend breaks, it must be confirmed because people will continue to buy the dips until they are told they're wrong. So what might that look like? Well, 6,470 looks like a key zone for traders to hold this morning. If they cannot, look for the bottom of the box. So does that mean within trend that we can wait here, take a long, and then watch it go up to prior resistance? Yes, we can. We want to trade level to level and move up our risk events as we stay in the trade when momentum starts to drift. Now, momentum is still in positive territory. It is above zero. When momentum is above zero, we know even more that dips are buy zones. Are the traders looking for 6,500? You betcha, especially into expiration on Friday, okay? So we want to watch out for these motions. Upside, let's do a Fibonacci. And let's do a Fibonacci. I don't know if you guys heard my husband from the other room. It was quite hilarious. If we put up a Fibonacci on the highest volume candlestick that we've seen over the prior days, that's just yesterday, we can see that we're sitting right at 6,483. What is trend? It's up. What is momentum? It's positive but flat. Pullbacks into the base area that are a little bit higher, 64.77, 64.78, could give you a little bit of motion. We're looking for the range break above here on the opening volume candle. And if that opening volume candle is solid and not very tepid, you know, a solid one's just going to be big, you're going to move up into the space. Collapse into a 15-minute chart if you're so inclined. Upside pressure goes from 64.84 to 64.98 and the big fat round number of 6,500. You know, we aren't going to have an emergency rate cut, I don't think. But we'll see, right? I don't think that's going to happen at all. All right, taking a look at the NQ. A lot more lines in the sand here. So let's remove all rectangular formations, and we can see that there's a fair bit of price action events. 24,000 looks like it's the top of the range. 23,950 looks like the next one. The highest volume stick candle, and let me clean this out. Remove all annotations. And let's go back to basics. Here we have the opening candlestick formation, high volume. The second highest volume occurs at 3:30, last 30 minutes of the trading day. Opening candlestick formation inside of the range. Break of the opening 30 minutes, it goes above. We know, if we look to the left, potential resistance, that's an all-time high. The trade would be, if you're so inclined, to take the break or take the reversal back into the range. Notice it's holding very nicely. If you want to, you can draw a 50%, just eyeball that 50% range between that opening candlestick, that high volume candlestick, and you can see it comes back into the 50%, holds it, comes right into that moving average, and breaks to the north. Slow grind before a breakaway. Let's see what the big volume event of the pre-market, what time is that? Big volume candlestick at 3 a.m. It's pre-market, but you can show that it is a breakaway formation very nicely in that space, right? We're looking at, what is today? Monday, Tuesday, Wednesday. All right, we talked about upside. Now the last thing we want to do is draw the Fibonacci of the range of that 30-minute candlestick. If you are a purist, you know, you might want to take the entire leg from the top of the motion to the bottom of the motion. That actually might work. We'll talk about these places that you can draw Fibonacci's later on in the series, but I want to get us anchored in price flows first and understand that dramatically. Notice volume is collected between 23,800 on the high side and 23,650 on the low side. This is a clear breakaway formation. Top of the range looks like 24,200 if you use the Fibonacci. What is trend? Up. What is momentum? Down. It's looking for support, right? Where would you buy this? You can see these lower highs cresting, but they could just be sitting still. So the choice might be, hey, I want to take a long here at 23,983 and trade it upward into the space. For me, I like going to the bigger fat numbers. That's way down here at 23,950. And that will give me my long action event with 23,930 as my support zone, as it were. Okay, so that's what I'm staring down. Remember, trend, master and commander. Then this is the nuanced event of momentum, always relative to trend. Watch for highs to stop breaking, but notice highs stopped breaking here, But trend just said, I'm pulling back into support. Upper levels go all the way to 24,122. If they break down, if they break out, if they break down, 23,930 to 23,900, likely support zones. I like giving the benefit of the doubt to the high volume candlestick at 23,950 for my entry. Let's take a look at the YM. Okay, YM. I like doing all the annotations cleaned out so we can see what's happening every single day. All right, so here we go. Yesterday's high volume candlestick, all the way down here at value area low, 44,350. So what does this tell us? If we're staring down 3 days and we see the high volume area, and then we notice that the value area is above us, it tells us there was a lot of buying above this price point. And so buyers are very enthusiastic here. Let's take a look at the 330 candle, because we know institutional motion comes in there. And wouldn't you know it, it holds the floor right where institutional buying comes in at 44,508. Look at the opening range candlestick, breaks both sides of it, comes back into the bigger, broader space. What is trend? Up. You might go, hey, isn't that kind of flat? You could say yes, but again, a flat moving average tells you you're going to go from range low to range high. Range low to range high. Don't overthink it. Is what it is. Pullbacks, it's looking for support, still in positive territory, holds the low of the high volume candlestick at 330, breaks away. Now, could these guys be looking at 45,000? They could. They could. Let's do Fibonacci. Fibonacci shows 44,723 as the next space up. Pullbacks into value area high, potentially the high of this 30-minute candlestick that we're watching. That's 44,508. The point of control makes it a little sticky here. So the ideal buy zone, in my mind, would be all the way down here at 44,514 to give us the least risk, highest reward. If you want to chase it out, it's very likely to test this 44,580 before expanding further. Where's 3.5? Okay, let's mark up 3.5. That's 44,810. All right, micro Bitcoin. A lot of micro Bitcoin news up around the space. Whoa, that's pretty important because we're moving back into this space, but let's delete them all. Remember, our setup needs to be simple, needs to be able to be followed, and it needs to have the least amount of fuzzy associated with it. So, high volume of yesterday. Let's see what time that candle came up. 9:30, right? Notice it breaks the top, comes into value area high, pulls back all the way to value area low, and then breaks up again. Now, here's a nuance. The reason that I use 3 days of data is so that the value area doesn't jump around on me if I'm just using 1 day, because a big inflow of price can totally shift that value area. So we look at 3 days to make sure that we have regions that don't jump around on us. That's why I use the 3-day formation. Now, notice opening range candlestick. Statistically, going to break both sides, broke the upside into resistance, look to the left. That's going to tell you the target area. If you're saying to yourself, whoa, that means I buy it at 120,400 and then 120,700 is my target zone. That's not a lot, right? So you wait, big volume candle comes into the value area low, 63 simple moving average sitting right in the middle of that noise. This makes things a little sticky. Notice also, momentum is positive, but flat. And that means it's not accelerating, okay? Momentum is accelerating here into prior resistance. Always look to the left. Get in the habit of looking to the left. If we're printing all-time highs, then instead of looking to the left, you draw yourself a Fibonacci, okay? So pre-market candlesticks. Look at all of that pre-market action. Let's zoom in. What? Okay. Pre-market action really hot and heavy last night, 10 o'clock. Let's look at that 10 o'clock candle. Traders come into the base of it. Let's expand it to go through our trading day, right? They come in here, they break the top, they break the bottom. Value area low is the number that you want to watch, okay? Super important. Traders are trying to build out more price action to the upside. See all the boxes of bigger volume, right? This is the biggest volume. This is the next biggest volume. They also break away. Stair steps, again, stair step formation. Pullbacks equal buy zones. Why? Trend, we're above the 63. Our momentum is flat to upside, so you want to watch them walk through the ranges. The last key buy zone was up here at 120,000. Probably here, right? That's the key buy zone. We have to see if it can move above that 121,310. Price action and this chart in general is in the news. Let's draw Fibonacci on recent exposure. We can see prior highs are right up there in the expansion zone at 122,750. Pullbacks, buy zones. Could they be a little bit bigger? Yes, rotationally, in my mind, the good buy zone is not until all of this heavy congestion, where all the traders came in and said, you know what, this is the zone, this big area, so my minimum buy zone region would be just below the point of control, and that is 120,100. That is what I am staring down right there. CL, what is the CL contract right now? Just a little bit of sniffles. Not too bad today. Don't sound like a train wreck like I did yesterday. All right, let's clean this up. Going to clean up all the annotations. A lot of buying here this morning. That's very interesting. Okay, so biggest volume candlestick of the entire day, 2 p.m. Eastern. Now, oil closes, I think, at around this time. I trade the whole chart, so no. But that's the highest volume of the day. We have to pay attention to it. Why? Notice, it comes into play again. If we break that area, we are going to head lower. How much lower? You have to look to the left. So here we go. Look at the range on this opening 30-minute candlestick formation. Gigantic. We lose the zone, retest the value area low, and then double bottom. What is momentum? It's negative. What is trend? It's negative. What does that tell you? The bounces are going to have sellers. What is the key bounce zone? The high of the largest candlestick volume of the prior day. So if you're looking for a short, that's your man, $63.31. The opening range formation could give you a nice buy point at the base to get to the top of the volume point of control at $63.20. That is close to the high of the opening range candlestick. Congestion right here. This likely the shorting zone. If per happenstance you get up here and this happens to be some kind of awful megaphone pattern that we've started, and you take a short, look to the left for heavy resistance old support that becomes potentially heavy resistance. That number is round and about 63.50 and some change. If price action hits the edge of the low volume node, statistically speaking, it should go to the top of the range. That's a pretty big candlestick in the formation, but we are rejecting the value area low at 63.08. You could also sell that zone if you are so inclined. Let's take a look at gold. All right, lot going on with gold. Clear consolidation. Clear consolidation. You might go, what do you mean? Listen, you see all this? 3 days of, look at how tight the value area is. This thing is getting ready for a big move, right? A lot of times folks will look at this and go, ooh, could be a cup and handle, could be, pick your poison on what you like to look at. But again, I am a simple Simon. I really am. I truly am. I look for the things that make the most sense. Look at what just happened. Highest volume candle of yesterday. Look at what we just did. Popped right into it, buying again. Here's the problem. If you're thinking, hey, I'm going to buy this and keep it, you've got clear resistance at 34.20. So you don't want to hang on for some great big motion, but you can continue to buy the dip. So you go from support to resistance. But Anne-Marie, what if it breaks away? What if it breaks down? Manage the risk. It's the only thing that you have. If you say, all right, I want to trade for the breakout because trend is up, momentum is positive, I've got myself a potential formation that looks like my dips are buys. Where would I do this? 3,400, 33.97. I did take a trade at 33.97 last night, closed it about 2 hours ago. Got up and went, oh, that's lovely. Great way to start my day in my personal accounts. Now we take a look at what's next. Old resistance, new support. You might say, hey, that's resistance. I could short here, yes, but momentum is positive and you're above your trend. So if you take a short at the top, realize old resistance, new support is going to be where it's at in terms of taking that quick strike trade. All right, finally, let's take a look at SPY. SPY is sitting in a very interesting patch, right? 9:30 candle, usually the one to watch here. 2 sets of them, pretty heavy buying into yesterday's close. Was not surprised about the upward flow in the overnight. And so what are we staring down? Support, 642.85. It was resistance. Now it's going to look like support. What is trend? Up. What is momentum? It's up, but flattening. That means it's not accelerating. So when you do that, when you buy the dip, you take the profit at old resistance. Okay, upper edge of the range, 645. If we stare down, let's see what's, right, we've got high volume here, and let's draw this Fibonacci. See where our expansion zones lie. 645, ooh, right at the edge of this resistance zone. And then 646. Dips or buys, folks. Where is the dip? Look for the highest volume candle in the formation. And you've got yourself a measured risk event. All right, everybody, take it easy. I'll see you on the streams.